Hi, friends. Welcome back. So, headline US GDP rose 2.8% in the third quarter on strong consumer spending. And as we go through these headlines, I want to be certainly asking the question what's the market doing? How's the overall economy? What's consumer thinking? And what's up with the election? I know there's a lot of things up in the air right now. Essentially, the GDP came in at 2.8. Economists were expecting 3%. And this is a comment that we got in just an hour ago from Texas Diver. And Texas Diver says, "Thank you for reporting the facts." And you're welcome, Texas Diver. I try my best to just literally show you facts and essentially have conversations about said things. However, there's more. Texas Diver also says, "But you're kind of a Debbie Downer." Sorry about that. How about throwing in some good positive news to mix it up? Now, here's the thing, guys, and I just want to make sure this is clear. For many people on YouTube, they essentially just want to find channels for the hottest stock and crypto picks and want to get rich quick. That's what a lot of people want. And so they want to sort of get that positive, vibes going. Oh my God, you're all going to be rich. Buy this now, and you'll be dreaming of the promised land. The problem is though, is that if you're only looking for positive news, there's a lot of traps out there. And I'll give you an example. I just made a video just a couple hours ago about this dude, ticker symbol U. He's all pumping out stocks. He was paid to pump a penny stock recently. I made some videos on that. And recently, the SMCI thing looks like it crashed, and I guess he was downplaying the short report on said thing. But he does give you positive news, and he has a nice smile. So there's that. So I'll let you guys decide if you want facts or you want to be pumped stocks and crypto all the time. So for me, I like to stick with facts. And yes, I do make jokes from time to time, and that's part of the fun. But I'm not just gonna pretend like GDP is higher than it is just to make you happy. GDP is 2.8%. Again, economists were expecting 3. When you take a look at this, it looks like it was a little bit lower than the last time we checked in. So it was by quarter. And then I guess the forecast going forward, at least as of now, I mean, anything's up to change, is GDP growth under 2%. That's the forecast. So we're at 2.8 now, and they're actually expecting I guess this would be Wall Street Journal survey of economists expecting a lower forecast of GDP going into next year, right? So the way things are setting up, if I was a betting person, I just feel like we're getting ready for a pullback after the election. That's just sort of what it's feeling, because we've just been kind of going up and up and up and up and up, and yeah, we'll see. But I do want to talk about a bit of positive stuff. If you bought a home in 2019, you're $158,000 richer. So congratulations. This is actually quite interesting because they're taking into consideration, home costs, be it insurance, repairs, homeowner association, taxes, etc. And if you're a renter, I guess since 2019, from then to now, you're down 89,000. I want to read through this stuff. It's actually really quite interesting. It says here, for someone who purchased a home in 2019, just before the pandemic hit, and you guys can let me know if any of you did this, and the housing market turned red hot, the wealth generating benefit was approximately 158,000. A renter over that same time period cumulatively lost 89,000. This is coming from an economist over at First American. And this is the chart of how they sort of came up with this appreciation. So this black line up there, that's your if you're a homeowner, and rent, right? This is the money that you're losing if you're renting. So there's actually quite a big difference here. But I just got to make this clear, though, your mileage will vary. One thing is too that we just talked about a couple of videos ago about versus renting versus buying. Though that's comparing 2019 to today. There's no necessarily exact prediction of like from today and then 5 years from now. No one necessarily knows. I'll just say this: definitely rates are coming down. We can see that, but I just still think houses prices are still very, very high. It feels like we're in bubble in many different markets. Will the bubble pop? I mean, in my opinion, there's at least slow down, right? Will it pop entirely? Who knows? I mean, it's just the reason why it's hard to talk about this stuff is because like I've seen real estate prices go up like crazy in so many cities for so long. So I mean, I guess you think it would go down, but it hasn't yet. And is it really a bubble if it just keeps getting bigger? I don't know. But this is something it's really tough to determine. Other than I just tried my best to tell you the numbers of like when you look at the median income of a person and you look at the median home price. In the USA, I think it's something like 8 times, home price to median income, and then In other countries, at the higher end, it can be like 20, 22 times that kind of thing. And you'll see that in the big cities here in Asia. So USA is relatively inexpensive to expensive cities in Asia, but I'm not saying it's cheap by any stretch. Just home prices have gone up everywhere through the roof. And I think this is kind of an interesting one though, where it's saying, even though your house may have appreciated, taking into consideration all of the expenses, this is the amount of money that that you've generated in terms of wealth. But a lot of this is on paper because you haven't sold yet. And the one thing I mentioned to you guys before, so even though maybe you're down 89,000 in rent, think of theoretically you saved money by renting, right? Then opposed to buying a house, and then you actually just put that money in the market. That number is not compared here, but I'd be willing to bet that the renter, would be pretty comparable. It depends obviously what you're gonna put your money into, but it's certainly something to consider, right? So just because you're renting doesn't necessarily mean that you're not doing something else with the extra available cash. So this is an interesting chart to look at. And I'd like to hear you guys' thoughts on this one. This is also interesting. Home sales are up a bit, right? So this is, I guess, the biggest gain since 2020. But you got to take a look at the sort of whole picture. So there was a big decline. This was back during the pandemic, right? You can see this massive climb down. So you have these massive gains up again. This is be pending home sales. We are ticking up, right? I can see it right there. But like I said, when you look at the full chart, you can see that, in fact, it looks like the deals, this is pending home sales, are way down than what they were, say, comparing back to 2019. So that's kind of interesting. Basically, there's a couple things and people keep saying the same thing. There's just not that much inventory. Plus rates are still, I mean, and historically speaking, they're not crazy high, but they're higher than what they've been recently. I think a lot of people are kind of waiting for that 5% magic number. And we'll find out what the Fed says. So they're going to have a meeting right after the election. So like I said, we have this week leading up to it. And then next week, I think it's going to be really, really bumpy. I keep mentioning that because it just feels like that's sort of the way that things are going. And everything I'm reading seems to be pointing that. But who knows? We're all expecting sort of pull back in the market after the election, and then it doesn't happen. But we'll see. I mean, I think the other, and I know we talk a lot about election lately, but it's election year. You got to talk about it, and we're so close now. But there's a possibility we won't have a winner on election night. There's certainly a possibility of that. So, and it may delay because some of the states may get really, really close and trigger automatic recounts. I lived through this stuff in the year 2000, and if you guys lived through this stuff, you'll remember as well. It could be a long process. So do tune into my channel though for election night. We'll do some live stream and chat, and I mean, in my personal opinion, let's hope we find a winner that particular night. But I also say no need to hurry, get it right. So make sure you count everyone. This is something else I want to mention too, when they're talking about resilient consumer, etc. You got to read through the numbers and sort of what people are saying, because there's something that keeps popping up over and over from everything that I look at. So here's an example. It says the headline GDP print for a third quarter makes the economy look strong. Okay, sounds good. But beneath the surface, things are less stable. Ooh, not so good. Consumer spending, the main growth driver, has been narrowly boosted by upper income households, while lower income ones have grown more price sensitive. I keep seeing this thing everywhere. It just keeps showing up. And I unfortunately think that there's going to be a big divide and just keep getting bigger. It's been like this for a while, essentially between, I guess, upper income and lower income. And actually, this is sort of why I'm bringing both these things up. And I was mentioning, in a positive light, that if you're, say, renting, and instead of buying a home and you take that money, the extra money that you have and put it in the market, you're going to be doing pretty good. Maybe the same, maybe better, but just not bad. But I also want to also tell you the truth. There's some people who are renting and essentially, right, you're, as they say here, accumulate lost. And it's not like you have any extra money, right? So you're just falling further and further behind. Now, I don't, I don't mean to rag on anyone. I don't want to be like negative. I'm just showing you guys numbers and sort of, show unfortunately the differences in society. It's unfortunate. But this things aren't necessarily out of your control. This is sort of why you learn about these things, for those of you want to improve your financial situation. Always improve your job skills, right? So that essentially you're worth more in the marketplace. That's just a reality of it. You got to have skills that people want to pay you money for, right? So be able to offer someone a service that is essentially important and indispensable for whatever company or industry that you're in, and then manage your money well. So basically, save. I mean, essentially what it is. Like money comes in, don't spend it all, right? Money comes in, don't spend more than you have because you're capable of doing that in the U.S. market. I understand you see these numbers and say going back to the GDP situation here, where it says, hey, GDP is doing great. There was another thing that was kind of interesting. They were talking about how in the USA, the consumers seem to be okay, and that's a very, very different comparison to what we're seeing around the world. Now, it's okay is relative. The better way to think about it is like from the market standpoint, they're just saying consumers are still spending, right? Whether or not the consumers are actually okay and feeling good, that's a different thing, but they're still spending. Because for in some situations, some consumers they're going underwater to do so, or other consumers they're not quite underwater yet, but if there's any kind of downturn, right, they could really get hurt. That's why I showed you guys this chart before. What we were looking at it was at the downturn, yeah, the forecasted downturn in GDP, right? So we're sort of looking that there's a high possibility of that, at least according to economists, and then I'm mentioning the election stuff. So this is sort of like how I look at the markets. I read everything going on every day, and then I think about, okay, what sort of risk am I willing to take? Now, for some people, they are all, very, very high risk. So I'll give you an example. These days, you can bet on essentially who's going to win the election, right? So I know there's been a lot of press on the Polymarket thing, and sometimes I wonder if this is like Polymarket's, PR team, advertising team out putting this, out there, and it could be for all I know. And I guess I'm part of this machine that's talking about them since it's all over the news now. But essentially, there's heavy, heavy bets. There was a French person recently that put, I think, 28 million on the Trump side. So Trump's up like, 60 to 40 or something of that nature. And then I guess Wall Street is paying attention to this stuff, but these kind of stories, it's hard to say what's going on with the stuff. It's a crypto thing. What I will say with the election thing again is just go out and vote, express your opinion, and we'll watch the results as they come in. What's crazy to me though, and it creates a lot of stress, is like this the kind of rhetoric that gets thrown around. If you saw the last rally by Trump, I'll just be further frank, it was pretty awful. Here's an example of a headline here: Trump has no regrets about garden bile, even if it sinks him, and bigotry, misogyny, racism, that kind of stuff. And I know for some people this stuff can be a downer. But it's just part of what we're watching. Like you can't ignore the elections during this, during this time. It's about a week or so away, and it definitely affects the markets because Wall Street's taking bets either way of like if he wins, what companies benefit, etc. Maybe Tesla. If he loses, what companies lose, go down. Maybe Tesla. We talk about Tesla quite a bit, but certainly that's going to be an interesting one to watch. And any number of things. So some people take bets, depending on who they think is going to win, etc. Either the election directly or on particular candidates. I expressed my opinion in various ways on this topic. I think for me the choice is simple, but again, you guys make the decision that makes sense for you. One things I will say though, for those of you who don't necessarily want to be more risky or gambly, meaning that you want to take larger bets on one thing happening or not happening. If you just want to put money in the market and not stress out about that, index funds for many people is honestly the best way to go. Then you're just not stressing out about picking winners and losers. These are just various ones. I just throw up a bunch of different ones up there because one of the challenges of doing YouTube is that, just be perfectly frank, people want to say, just manage my money for me, etc., and do it for free. And I'm on YouTube for a general audience, and I have to mention this stuff because it's like it goes back to that person's comment of like, I want news to make me feel good, and please give me some good news. And I mean, I'll spin it in a positive way. If you throw your money in the S&P 500, over time it tends to do very, very well. And can I guarantee it's going to be the best investment ever? Not necessarily. I mean, it's just there are other things out there, right? So sometimes the housing market may be better, sometimes the stocks may be better, sometimes theoretically just paying off your debt would be better, right? Depending on where interest rate is at. Sometimes just holding cash and waiting for things to calm down may be better, right? I can't guarantee what everything's going to happen all the time in the market. But one thing, over time generally, markets do tend to go up. The S&P 500 tends to be a pretty good performer. Now, can you do well with individual stocks? I'm not against it. Just I think what happens with on social media, there's just so much hype out there for certain ones, and you get whole channels that literally just talk about like one stock every day. You know, it is what it is. But I want to just mention that, you know, just be careful. You can get really burned out there. Hot stocks like your DJT thing, which may or may not be for the money laundering, who knows? May or may not be for, you know, foreign money coming in to support a particular candidate. Who knows? But this one is really, really volatile. It's like what, down 22% in a day. Then on the positive side, you have Reddit, which is like going crazy at 40% in a day. So that's sort of why, you know, people, you know, are into individual stocks, right? It carries a lot more risk because you look at this and you're like, oh, you know, I don't want 20% a year. I want that 40% in a year, right? But there could be major swings to the downside to 22% down, right? So this essentially, you have to figure out what makes sense for you. My opinion is slow and steady wins the race, right? So for many people, this is the best way to go. Start out with a base with this, and then you know, if you feel really well informed on a particular, you know, stock, you looked at the financials, and you're living in realistic land. And also to be fair, yes, you can make money on trades. You totally can. I always lay that out for you. That's how the market is, but just understand that there's a lot of crazy things that go on every single day. And sometimes, you know, news will drop, and frankly, it can be, sorry, word to say, unsettling. So for example, I'm just finding out today, Dropbox, which you know, I use this company. I think a lot of people do. You guys probably know what this is. They're laying off 20% of their workforce, which is pretty nuts. So that's 500 people. And so, you know, when I see stuff like this, or here's another example, I keep reading news that Volkswagen, this is out in Germany, that they may or may not be closing plants and laying off a lot of people. I can't remember the numbers. It's like a really, really high number. Maybe it's 17,000 people or something of that magnitude, but it's high. And I think last time I heard is 3 plants might be closing, but I guess now they're trying to figure out a way to save said plants. And you know, when I go through news exactly, and I just go through all these things, I say, okay, that's sort of what's going on. Those are the risks ahead. And then you think, okay, where do you want to allocate your money? And essentially, you know, you have to figure out what makes sense for you. How much risk are you willing to take? And what's your time horizon? So if you don't need the money today, then the market makes sense. If you need the money today, then you don't necessarily put so much money in the market because, you know, you can't afford necessarily a downswing, and you know, the time for it to come back. It's all up to you and make sense for you, and sort of the importance that I try to do in is having a chat, because, you know, like I said, when I try to address these kind of comments, is, you know, have a community to where you can bounce ideas off each other, just talk realistically about this stuff, and not necessarily be on channels that where they just put rocket ships everywhere and and say everything only goes up, because like I said, in my opinion, this next couple of weeks are going to be very, very volatile with the election, the Fed meeting, and just a lot of uncertainty, because, you know, we're not sure where to go from here. And then we'll have the coming of the new year, and people will reposition yet again. So hold on your hats, please stay tuned, and hopefully this is always helpful. And I'll catch you all next time.